Ooh, boy, it's getting a little bit spicy in the markets, isn't it? Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market update. Hope everybody had a very good day in spite of all the red in the markets. Now, guys, in today's news, what appeared to be a fairly regular day turned very sour in the afternoon. Take a look at these drops on the SPY here from the top of the day to the bottom, talking about 2% worth of drop on SPY, and QQQ, one of its worst days in recent memory, from the top to the bottom, 2.5%. This was one of the fastest sell-offs and probably most violent sell-offs that I've seen pretty much all year, guys. And the reason for the sell-off was pretty much a combination of two things. Now, number one, you had Neel Kashkari, one of the most reputable Fed members in terms of how the media follows his every word, come out and say that there might be a possibility, if inflation stays sticky, that there would be no rate cuts whatsoever for the entire year. Couple that at the same time that Neel Kashkari was speaking, at the same time Biden was having a phone call with President Netanyahu of Israel, of course. And what happened in that phone call was not very good, guys. After a few airstrikes gone wrong by Israel into the Gaza Strip, unfortunately, a few humanitarian workers were killed, and this seems to be the last step for Biden. Biden pretty much giving Netanyahu an ultimatum: either rectify the situation and stop the warfare activities in the region and provide more help for humanitarian work in the Gaza Strip, or else. That was pretty much the gist of the message. So, geopolitical tensions, and number two, a few Fed members coming out and saying, higher for longer, data dependent, but if inflation stays sticky, maybe even 2 rate cuts, 1 rate cut, or maybe none at all this week. All of that combined, guys, has led to market uncertainty, the likes of which we really haven't seen since last fall, on the last time that the market sold off under similar conditions, under fears of inflation resurging. So guys, in today's video, we're going to take a look at exactly what happened in terms of the news headlines for the day. Then we're going to go over the technical analysis, of course, on our major indexes and our big tech names and see, are the bulls still in control, or are the red flags becoming a bit too many that could potentially warrant a longer form sell-off, maybe for a couple of weeks up until maybe a couple of months? That is all on deck for today. So without further ado, guys, let's get right into today's video. Now, SPY obviously down 1.22% on the day, QQQ down 1.53%, and everything across the board was red. Prior to the sell-off, guys, this entire heat map, the whole day was very green. It was a very broad-based market. And then pretty much, we turned into fear sell-off very, very quickly. Nothing was spared. Only a few names ending green on the day. Meta at one point was up over 3%. Tesla at one point was up over 4%. They are the only two remaining tech names that remained in the green. Everything else, especially semiconductors, coming heavily down. AMD down 8.27%, and really across the board here, guys, broad market sell-off. The one-day relative performance shows this even better. Everything pretty much selling off on the day, nothing being spared. So what exactly happened in the afternoon to warrant such a heavy sell-off in only 2 hours of trading? Well, we touched upon it briefly in the introduction, but let's go over the headlines. Stock market today, stocks shed gains ahead of March jobs report. Now, obviously, guys, we have a huge jobs report coming out tomorrow, which is going to be your non-farm payrolls report. That comes out before the market open. It is going to be a crucial piece of data to once again put together the narrative. How many rate cuts are there going to be, right? Is the jobs market still healthy? If the jobs market is still healthy, once again, it just reiterates higher rates for longer, and the market will probably not like that. However, that is the first case. If the jobs market comes in severely underperforming, right? So if this non-farm payrolls number comes in line, it's gonna pretty much give the conclusion that we're gonna still need rates higher for longer. But if this job report comes in significantly negatively, which the expectation is not, because once again, most of the jobs reports that we've gotten this week shows that employment is fairly stable. But if for whatever reason we miss this big time to the downside, guys, well, yes, it's going to be a good point in favor of rate cuts potentially being brought forward, right, to either June or July. But if ever it comes in very, very negative, it'll show that there are signs of weakness in the economy, and the market will not like that. So very important day for the markets tomorrow, that's for sure. Now, in terms of the continuation of the article here, all three major averages reversed strong midday gains after Minnesota Fed President Neel Kashkari suggested the Fed may not cut interest rates at all this year if inflation progress stalls. Oil futures spiked more than 1% amid escalating tension in the Middle East. That was referencing the conversation between Biden and Netanyahu of Israel. And you can see here, guys, they are right. Oil really spiking hard on that news. Take a look at this spike in oil the same time that you had your broad market sell-off, pretty much to the exact minute. Now, moving on further. Prior to Kashkari's comments, the market had shaken off a rough start to the second quarter after Chair Jerome Powell soothed concerns the Federal Reserve would lose its nerve for making rate cuts. So we've heard from Jerome Powell twice in the last 2 weeks, and he hasn't changed his stance ever since the FOMC meeting 2 weeks ago. The problem is there was a few Fed members this week that were a bit more bearish than Jerome Powell. Obviously, Jerome Powell really being the spokesperson for the Fed as a whole, what he says holds more weight than anybody else. But if a few Fed members, guys, are a bit more bearish than the expectation was, it's leading the market to be slightly uncertain about the future. Now, I want to go over a few points, guys, in terms of market uncertainty and really compare it in relation to the sell-off that we had last fall, right? So taking into consideration this sell-off we had last fall, this was when we had the first iteration of higher for longer, and Jerome Powell really reinforced that for pretty much 3 months, took a very hawkish tone, said higher for longer, higher for longer. We're not sure if inflation is going to be coming back up. And as a matter of fact, inflation did come back up here in the later stage of that cycle. Pretty much the July and August inflation reads were coming slightly up before resuming trend to the downside, but it did some damage to the markets in the process. So at the end of this whole process, guys, at the end of October, coming into November, right, the reason markets started rallying is pretty much because you hit peak rates and you had your first Fed pivot officially in October, where they finally said, we're pretty much done raising rates. We are sufficiently content with how high rates are right now, considering the fact that inflation is still on a downtrend. So that did a great job of turning around the markets. In layman's terms, guys, right, back here, we went from, in this early stage of the bull run, we went from 3 to 6 cuts in 2024. Stocks are cheap because everything had been selling off at that point for 3 months. Inflation is coming down, so it's going to be buy. And that's exactly what happened. People were buying. AI news, back and forth, right, just really took off, especially in your tech names. Now, where do we stand currently here, guys, right? At the end of our 5-month rally at this point, things are starting to get a little bit more uncertain. Now, and I always have the bear thesis pulled up, right? Inflation will uptrend. This has been a slight worry. Now that we've had hotter than expected January and February inflation numbers, Jerome Powell has said it's not a problem. And a few other Fed members have also said it's not a problem. They'll remain data dependent. But the worry is always there. If inflation starts upticking here March and April and even May, well then, this will actually fulfill one point of the bear thesis, and that will definitely lead to a second point of the bear thesis, being fewer rate cuts than anticipated. If inflation comes up, and let's say, the jobs market stays the same, the economy stays the same, well, they're not going to be cutting rates as soon as June and July. And that leads to a few speculative analysts that are saying maybe the first rate cut is even going to come in August and September. So it's just not as clear as it was even a month ago. A month ago, even 2 months ago, everybody was sure 3 to 6 rate cuts on the year, inflation's coming down, we can just rip this market to the moon pretty much. But at this point, guys, now we're in a little bit of a different narrative shift at this point in time. Things have run a lot. And as you can see, guys, in the past month, the S&P 500 has done pretty much nothing. QQQ as well has done pretty much nothing. People are starting to get concerned about valuations up here if ever some of these bear thesis points were to come true. People are getting nervous that we're a bit too extended right now, and that's why a lot of retail traders and institutional traders have been taking profits over the last month, refusing to push this market higher. So where do we stand now, right? 6 months ago, 5 months ago, we were at 3 to 6 cuts for 2024 guaranteed. Stocks are cheap. Inflation is coming down. We need to buy. At this point, we're kind of getting a little bit of a narrative shift now, right? We're getting maybe 2-3 cuts if the data supports it, right? So we're kind of walking on thin ice right now in terms of being data dependent. Inflation is proving to be stickier than expected. Stocks have come hot after a 5-month rally, and now people are nervous if this bear thesis will actually start to come true. At least a few of the points may potentially be starting to come true. And that has led people to be nervous, guys. It's very tough to keep pushing up a market when you have a little bit of uncertainty on the table now. And when uncertainty moves into a fear narrative, such as we saw the first glimpse of that today, right? Neil Kashkari, one of the first Fed members that's saying, you know what, we may not actually get any rate cuts this year. Now, he has said this in the past. He said this back in February, and the markets kind of shrugged it off. But now that we've kind of been stalling at the top end now for a while, any negative news headline is going to impact the market a lot more. Add to that some geopolitical tensions and potentially the US overextending its implication in the whole Israel Palestine situation, right? It just leads to more and more uncertainty in the market. And when there's more uncertainty and there's more short-term fear, people just don't want to be involved, right? So you don't want to keep buying up here with so much uncertainty. That's why a lot of people are starting now to take profits, and we're starting to lose a little bit of structure. The last point that I want to make on this, guys, we need to look at our industry leaders, right? I've always said, keep an eye on QQQ, XLF, and XLV. If all three of these sectors, guys, are dropping at the same time, take a look, same time, same catalyst, right? Now cracking through key levels in healthcare, financials starting to break down, losing the 12 EMA for the first time in a long time, QQQ losing the trend line as well. We are coming in to a potential scenario, guys, as I've explained on the channel before, where this one is going to start first. This one's going to start first, and then if we get some bad data, they will start adding fuel to the fire and really start bringing this sell-off down even more. Now, it is still going to be a healthy correction overall. It's just going to be a little bit of uncertainty similar to the one we had last fall. And the markets have not had that, guys, in the past 5 months. Now the doubts are starting to creep in. And you can really get a sense of that, guys, in the markets over the past pretty much month at this point. We've been really flat. People have been unwilling to bid up some of your market leaders. Some of your market leaders include, take a look at what AbbVie is doing, right? One of your market leaders in healthcare. Tremendous rally here over the past 4 months. Look at the past couple of days. Clear break of structure. This is one of your heaviest weights, guys, in the entire healthcare sector. And they really have not been having a good time. Take a look, probably trying to set the monthly higher low. Other sector, other industry leaders, NVIDIA, right? NVIDIA as well, doing pretty much nothing for the past month, starting to break a little bit of structure to the downside here, starting for the second red week in a row. This has not happened, guys, since the start of the year, pretty much. Maybe heading into monthly consolidation as well. Another couple of popular names, right? These are all the names that people were super bullish on, right? SMCI, doing absolutely nothing, potentially setting up for the head and shoulders flush here. Take a look at your monthly, potentially monthly consolidation underway already, and even weekly coming down hot, right? Those are some of the names that were really popular, but you can see the net shift as starting from the month of March when a lot of this uncertainty started happening. And that's what I was saying this for a while on the channel, guys. I was saying it since mid-February, that February and March seasonality was supposed to be down. March was relatively flat. We didn't have much down, but you can see all the names that people were so bullish on now, they're not so bullish on them anymore, are they? Take a look at ARM. ARM really hasn't done anything after coming up substantially here after their earnings, really coming down now, breaking structure to the downside. Even the weekly downtrend has commenced. Monthly consolidation is underway at this point, right? You have to take note of these things. AMD as well. AMD monthly consolidation is now underway. Huge selling from the tops ever since the beginning of the month of March. Everything is coming together. Take a look at some other of your popular growth names that people were bidding up to the moon because the fundamentals were good, the market sentiment was bullish, but now they're starting to come down. CELH, one of your strongest runners as a whole, guys, now starting to curl over on the monthly. They've now dropped from the highs early March. Fittingly, a lot of these names, right, mid-March, now down 23%. These are just some of the growth names, guys, that people are getting behind, and they're just not carrying the markets anymore. People are cutting their bets. Elf Beauty, another one of your market leaders in terms of growth stocks, that one is now down 26%. That one is also now starting monthly consolidation, similar, exactly what it did last fall when there was more uncertainty in the market. When there's more uncertainty, guys, people pull back on bullish growth bets and try and rotate into value. There's a lot of names, even the value names, guys, that were a bit overpriced, losing levels. Take a look at Costco, right? Costco, since their earnings, they were having a tremendous rally since November, break of structure, loss of the moving averages, now pulling back to the downside. And the damage doesn't really stop there, guys. Even a company like McDonald's pulling back from McDonald's now pretty much is negative on the year, but you can clearly see, right, investors getting a bit worried here, even bringing down some of your value names, even some of your leaders in the banking sector, right? JP Morgan, 5-month rally at this point, starting to pull back, one of its more red weeks, guys, in the past 4 or 5 months of trading, trying now at this point to break structure to the downside. We'll see if we follow through. So essentially what I'm saying here, guys, is we're entering an environment that the market doesn't like. What does the market not like? It does not like uncertainty, right? There's a disconnect right now between what Jerome Powell is saying and what some of the rest of the Fed members are saying. They're all saying that they're data dependent, but a few of them are going further than Jerome Powell. Jerome Powell is staying put, 3 cuts for the year, data dependent, we need to be patient. But a lot of Fed members have now been saying, if the data is bad, and Powell has never said this, Powell has never said, if the data is bad, we'll do this. A few Fed members over the past 2 weeks have been saying now, if the data is bad, we'll probably cut rates a lot later than expected and fewer than expected. Maybe 2, maybe 1, maybe none at all. And the market does not like this disconnect. Add to that some heightened geopolitical events such as the one that took place today, and you end up with a market that is a little bit timid right now, a little bit fearful. Valuations are high. So I maintain the same thing I've been saying, guys, for the past month and a half. It's very hard to time key reversal points in the market, such as tops, right, leading into corrections, and such as bottom of corrections. It's extremely difficult to time those, right? Well, the only thing we can do is pay attention to the early warning signs. And the warning signs have been here for about a month, that valuations were stretched. They were a concern. The AI narrative took over everybody. The market was really, disconnected from reality at a certain point, right? They weren't listening to January and February hot inflation data. Jerome Powell pretty much shrugged it off as well. And people thought that everything was just fine. But now the reality is starting to set in that higher for longer really means higher for longer. And if inflation starts upticking here, well, it's definitely going to be higher for longer. You may only get your first rate cut, guys, August, September. That is the worst case scenario. And that's why the market really fell off a cliff here today, guys. It's starting to think, maybe we were a little bit too bullish. And maybe we were a bit too bullish also in calling Jerome Powell's bluff that they're only going to do 3 rate cuts this year. The market wanted more and they wanted it faster, but now it's starting to set in. Maybe the market is not going to get what it wants. And when the market doesn't get what it wants, guys, it tends to throw a little bit of a tantrum. It did the same thing. This reminds me eerily of what happened back in 2018 when the Fed wanted to increase interest rates and the market says, no, you can't do that. The market then proceeded to fall pretty much, 20% thereafter. And then they had a quick recovery, right? Not exactly the same scenario, but it just goes to show you guys, when the market's not happy about interest rates being higher for longer, it can throw a little bit of a temper tantrum. But we need to remember, guys, that we are in the context of an overall bull market. And I really want to reinforce this hardcore, right? So if you take a look, guys, if we zoom out, right, I have been trading these markets for a very long time. I could probably tell you where a lot of these major sell-offs, why they occurred, right? So let's go back in time and you'll see that the little ones probably don't matter. So let's go back in time. 2008, everybody knows why the market dropped there, right? Does anybody know why it dropped in 2010 for about 3 months here? From the period that went down about 17%. Does anybody remember why? No. Was there possibly geopolitical events, potential events about the economy in the US that people maybe don't remember? Probably, because they weren't important. Things happen in the market all the time, guys. There's war headlines, there's earthquake headlines, there's so many different headlines in the market, guys. But the only ones that matter are the ones that truly have a significant macro impact. Global recession 2008. What happened here in June 2010? What happened in August 2011 for it to warrant a 15% correction? Nobody knows, but it was not significant enough to derail a multi-year bull run. What happened here in 2015? I remember it was the conflict surrounding Donald Trump being elected as president for the first time, and it really rattled the markets a little bit there for 12% to the downside here. So I remember that one. But was it a big thing? Did anything change in the form of financial macro data? No, the bull market kept moving on. What happened back here in November of 2018? It was an interest rate increase, fear that the Fed would increase interest rates, and they didn't do it. And so the market pretty much just came back from that drawdown. And that one right here, guys, was about 20% to the downside as well. What happened here in 2020? COVID. That's natural, right? But what happened here in 2022 as well? Well, that was your first interest rate increase cycle pretty much since prior to your financial crisis. So all of these events, guys, are fairly large events that are noteworthy. But for the few little moments in time where we pull back occasionally, right? Are those noteworthy moments in time in the overall context of a bull run? No, and I believe this time will be much of the same. I think we may just get a few months worth of sell-off. This one was last year, right? This was notable to us. But for the most part, guys, right, unless we get true macro shifts, you can see that some of these red months that we have in here, guys, some of them, it's very hard to remember why they even happened, right? Even prior to 2008, this S&P futures chart doesn't go up to it, right? But we have some corrections back here, guys, that nobody even remembers why they happened. So let's just focus, guys. Let's just stay focused that the bulls are in full control of the narrative right now. Interest rates will be coming down at a certain point in time over the course of this year. Whether it's in August, September, nobody knows. Maybe they even don't cut for this year. But does that matter, guys? Not really. The economy is still healthy. The jobs market's still healthy. Inflation, although sticky, is coming down. And even if we get a little bit of an uptick in inflation, guys, even if it lasts for 2-3 months, I'm pretty sure thereafter, it will be coming down long term. The supply chains are now fine. Companies are running out of pricing power with consumers, right? Companies like McDonald's, Starbucks, Walmart, they've all touched on this. They're running out of pricing power. They cannot charge consumers any more money for goods and services. People just don't want to pay. So it will be coming down over time. But it's going to be, like the Fed says in their own words, guys, it's going to be a bumpy ride. But one thing's for sure, even if you get a little bit of a bumpy ride, it's still, in my opinion, going to be an overall extended bull run for the next couple of years. Are things as bad as they were during COVID? No. Are things as bad as they were when the Fed was increasing rates super fast in 2022? Supply chains were absolutely destroyed. Companies were hemorrhaging money because of supply chains being destroyed, firing tens of thousands of employees, right? No. Companies now are more efficient. They've learned from this period. Companies now are more efficient. They're more in tune with watching their profits and their bottom lines. They've already done the layoffs and whatnot. So everything overall is good. Short term, can we be a little bit bearish because things are overextended and we have a little bit of uncertainty? Yes, but in the long term, I'm still bullish. That's why if we do end up with several weeks of pullback, such as something like this, right? If we do end up getting that until our first rate cut in May, in June, it will not matter because once we get it, once times are going to be good again, we'll still have broad market recovery. So if you're a long-term investor, guys, there's really nothing to be worried about in my opinion. If you're a short-term swing trader, as I've said before, this may be a very good time to start hedging some of your bets, right? Does it mean sell absolutely everything? No, but if you want to hedge your bets, covered calls, puts to the downside to hedge some positions, maybe some short-term, short futures, right? Just to hedge the portfolio so you're not taking, a month, 2-month bath if ever it gets that bad, right? So we got to just be careful, guys. The thing about financial markets, right? We call it risk management for a reason, right? We're in the business of managing risk. Any institution, any fund manager worth their own weight will always tell you that risk management comes first. We're not in the business of maximizing profits. We're in the business of minimizing the risk to the portfolio. That is what's most important, guys. If you try and maximize profits and you disregard the risk, you're just going to get crushed. It may work for a period of time when the markets are extremely bullish, but if you come in to a period of correction like this and you're over-leveraged on margin and stuff like that, even only a 7-8% pullback on QQQ could absolutely crush you, and it's going to leave you obviously psychologically a bit weak as well here, guys. So I'm just trying to avoid nasty surprises. I'm personally ready for this. I've been ready for this for over a month and a half. Whatever happens, happens at this point. If we're looking for dips, it's what we're going to continue to do over the next period that this market dips, whether it's 3 weeks, a month and a half, 2 months. Nobody knows, guys. Nobody knows. And if they did know for sure, well, those people would be trillionaires by now. If people could predict the market with 100% accuracy, right? Then, you would have trillionaires in the market, but it just doesn't work that way, guys, right? The market does not move on its own. People often talk about the market being alive, right? Well, the market does not move on its own. The market is a byproduct of supply and demand for shares, whether those are shares of indexes, whether those are shares shares of companies. That's how it works, guys. So if the market comes down, the retail and institutional investors are telling you, like, this is just not the favorable environment for them to stay invested. So that is a long piece that I wanted to do on the markets. It's probably the last one that I'm going to do, guys, because I've been giving these longer form analysis on your macro structure, technical structure, and now that we're finally breaking down, right, we're going to pretty much cover only technicals at this point. I did the same thing when we started selling off back here. We were warning of it back here, and when it finally happened, we went to action. So now is no longer the time for warning signs. The warning signs have been many, and so now we're going to prepare our best for a technical sell-off at this point, and we're going to be looking for really good companies at really good prices. That's the name of the game. We'll take this one day at a time. Obviously, this 1 day of selling could just be only that, 1 day of selling, and we can continue going up. But at this point, guys, I'm going to be very, very cautious, the same as I've been for the past month and a half, because now the red flags are starting to be a lot more than they were in the early phases of March. So hopefully all of that was helpful, guys. Now, with all of that out of the way, let's get right into your SPY and QQQ analysis, and we'll do a full technical analysis rundown, right? So, in terms of your SPY right now, daily downtrend is obviously in motion. We failed the highs, daily downtrend in motion currently. As of now, we're still holding horizontal support, which is this green box right now. The flush zone is 508.50. Break that, guys, and we really are going to fall heavy. The next area is going to be pretty much your 505, and then under that, guys, it's pretty much 491 at this point. So we'll take this 1 day at a time. The bulls still have some support, but if you notice one thing, SPY losing the 5-month uptrend for the first time. QQQ has done this now twice at this point, but this is the first time that your S&P 500 does it, so it has to be notable to us, guys. Daily downtrend into a loss of the trend line, loss of your moving averages, and I highlighted the MACD, right? We were overbought conditions on SPY now pretty much since the month of February. So it's not been since yesterday that we've been overbought. Now potentially due for a little bit of technical pullback. I could assume that we may pull back anywhere between 6 to about 8% on the S&P 500 at the most. Now that would really bring us back to our previous all-time high territory. Look at this, right? If we come down about 8%, it brings us right back to our previous all-time high. So the bulls have tons and tons and tons of support down here at your lower areas. And that would just be looking, guys, once again, we would just really be looking for a monthly higher low, similar to the October sell-off, higher low run. Higher low run. That's all we're looking for here, guys. So now the first warning signs are here, so we have to pay attention. Gonna be notable to us, guys. And in terms of your shorter term timeframes, with just a heavy sell-off, guys, it's gonna be near impossible for the bulls to V-shape this at this point, right? In one single move. The best they can do is try and two-step this. But as of now, guys, short-term timeframes, full bear control right now, could be expecting lower high, lower low for a continuation at this point of your new daily downtrend, continued flush of the support zone, and that would just be continued weekly consolidation. So we're going to keep a close eye on everything 1 day at a time, guys. Crucial rule. Now moving on to QQQ. QQQ doing much of the same at this point, right? Daily downtrend was started on QQQ. We were looking for the bounce. The bounce got really high this morning and then erased. So your daily downtrend simply continues at this point. We're coming into the last area of support at this point here, guys. This is your weekly higher low, 433. If we break 433 here, it will be a weekly downtrend on QQQ. I will say that again. A weekly downtrend on QQQ. That has not happened since this area right here. It's been a weekly uptrend this entire time. Now the markets are a bit tired. If we flush into this area, yes, we have support. We have the 12 EMA down here. We have my green box down here. But still, it would be notable if you lose 433, guys, weekly downtrend will be started. And you guys know weekly downtrend means monthly consolidation, looking for the monthly higher low. QQQ, same thing, right? We have tons of fallback area for the markets. Previous all-time highs are right here, roughly in the 410 all the way down to about 390 area for QQQ. And that would represent a sell-off of pretty much, 8 to about 10%, which is standard. Go back to, a lot of periods in time where the markets have corrected. Look, take a look at this one, right? Last fall was about 9%. Take a look at corrections in the midst of bull markets, 13% here. Another one top to bottom, 10% here, right? In the context of overall bull markets, you do get some pullbacks. This one was a bit more nasty here at about 20%, not expecting 20%, but just goes to show, guys, the markets can pull back. Take a look at this one. The Donald Trump sell-off pretty much 16%, 15%, right? In the context of an overall bull market, 13% here. So they can drop on the monthly, looking to set the monthly higher lows, right? Monthly higher lows for further trend continuation. Key levels approaching here on QQQ. And it's notable to me, guys, that we tested the trend line to the upside at this point, right? You can see clear retest of the trend line. I'll extend it a little bit more, right? It didn't get there. We were maybe just a couple of points off, but still the structure is the same. Loss of your daily trend. So daily downtrend right here. Now retest of the trend line and flush just leads me to believe, guys, that this is going to be your technical correction. Are we expecting this? No. But can we be expecting something like this? Similar to what we had back here, right? A bumpy way down until we get more clarity from the Federal Reserve, more clarity about inflation, more data on the jobs market, more data on the economy. That's what we need, guys. We need 2-3 months more data to confirm that this right here is under control, and that while this is in control, it's not hurting jobs and it's not hurting the economy either. Those are the things we need to watch out for. Now, moving on to financials as well. So you can see QQQ. One last thing I failed to mention is your loss of your MACD down here. We pointed this out for the last couple of days. The week closes like this, guys. First negative read on momentum in the last 5 months of trading. So there's a lot of notable things to us. Loss of a 5-month trend line, loss of a 5-month momentum cycle on the MACD, right? Tons of data, tons of red flags, uncertainty in the markets. Just going to show you guys that all the ingredients are there for a technical sell-off. Not a macro sell-off yet. That could be added fuel to the fire. But as of now, technical sell-off appears as though it wants to gain some ground. Moving on to financials now. Financials pulling back heavy. What do you notice about financials at this point? You should notice this, guys, without me saying something, right? Loss of the 12 EMA here. Hard red candle close on the lows. This has not happened any of the times that we broke the 12 EMA in the past. So at this point, guys, we were in a healthy daily uptrend. Now we have flushed the lows. We have now lost the daily uptrend, loss of the 12 EMA as well, and coming hard into this previous area, guys. This was always been all-time high resistance. We barely cleared it. As I was saying when we cleared it, I need to see a bit more to guarantee that this can act as support. Well, now, guys, we're starting to lose it a little bit, and financials start reporting. We get them next Friday. JP Morgan and some other ones are reporting next Friday, so we'll see how that happens as well. But look, overextended on financials on the RSI. It's pulled back a lot this week, and the MACD not quite losing it yet. We would need another week of red for it to probably start curling over, but just goes to show, guys, momentum is starting to wane off even in financials right now. So we're going to keep a close eye on this. At this point, we may be expecting lower high into lower low. That would be daily downtrend. That would be cause for weekly consolidation. Anything above 37, looking for a weekly higher low. So the bulls have tons and tons and tons of space, guys, right? On financials, just looking for a monthly higher low for further trend continuation. I would keep an eye, guys, if things really get bad over the next couple of weeks. 39, 38. If you're looking for a position on XLF, I would think that would be a very tremendous buy area. The moving averages on the monthly are going to curl up in there in that area as well. So that could be a likely zone. Now moving on to healthcare here. Healthcare. What is notable about healthcare as well, guys? I'm not going to say it. Now you guys should be experts at this just the same, right? You can see clearly loss of your moving averages for the first time, significant loss, right? When we've lost them in the past, we've been able to recapture them fairly quickly right away. No harm, no foul. At this point, guys, hesitation for about a month at this point, and then we got the flush. It all started with your news that came out earlier this week pertaining to insurance premiums, right? And now the sell-off has just been exacerbated by today's damage as well. So healthcare, daily downtrend right now, closing below our area of support. And we were talking about this yesterday, guys. It's going to be tough for the bulls to get this back. Below the moving averages, we were below this area of support. They used it as resistance. You can see that, right? Rejection, clear rejection here, and then boom to the downside, right? So doesn't matter why the market sold off today. It just mattered that it respected the exact technicals that we were looking for and then did proceed to sell off. So loss of the trend at this point, guys. On the weekly, you can see the same right now. We're coming down. The RSI is at a more manageable level. Look at the MACD, guys. Just about to cross momentum to the downside. First time in 5 months. This has to be notable to us. Weekly downtrend has started. Your first index, as I was saying this week, that hit the weekly downtrend. This is a big red flag. If QQQ joins Team Bear in the weekly downtrend, guys, only financials will be left. And financials is going to be very tough for them to hit a weekly downtrend off of a one shot, right? Most likely, the likely scenario for that would be something like this. But healthcare has done it already. At this point, guys, keep an eye on these level right here. We're now below our previous all-time high. So you have to look at a support range at this point, right? Where has most of the trading been done around the all-time high areas? You can see even the lower bound, we kind of rejected from here. We got trapped in this area right here. So this seems to be the more popular area of trading whenever we were coming up into it as all-time highs. And now to the downside, this is going to be the area we're going to look for the bulls to protect us. So the weekly lows are pretty much lost at this point, right? Now we have to look for this area of support. 140 all the way down to about 137 is going to be that zone. And if we hit the bottom end of that zone, guys, that would be a 7% sell-off on healthcare, which is pretty much the most that healthcare does whenever they have a really bad period in time. Take a look at this one. This was about a 9% correction, and that was last fall. So that could be an idea. And in terms of the monthly, since we're now in a weekly downtrend, guys, monthly consolidation already underway, just looking for a monthly higher low. So as you can see, guys, on the monthlies, everything's fine. Monthly higher low, looking for the monthly higher low on QQQ. XLF as well, looking for the monthly higher low from further moves. And XLV, healthcare, looking for the higher low for further price increases. So long term, everything is fine. It's just in the short term, we're looking to protect ourselves. Now moving on to IWM Russell. IWM Russell also coming really down hard today. Top of the day to the bottom, guys, down about 2.5%. The Russell was looking very good this morning. They filled the gap and literally got rejected to the downside now at this point. So if we break yesterday's low tomorrow, 203.26, it will be daily downtrend started. And at that point, guys, we are going to be looking for weekly further consolidation. If we lose 200, guys, that would be a loss of a weekly uptrend. And then we'll be looking maybe if the bears can set up for the weekly downtrend. Keep an eye, we're still above our previous area of resistance, right? Huge zone of resistance should now be acting as support. But if things really hit the fan, guys, could be due for some extended downside. I would not be surprised if we even come down further below that. So far, we're going to take this one day at a time, but we're just trying to project what it's going to do. And the only reason I say that, guys, is because we're looking for the monthly higher low on the Russell as well. Anything above 187.50, going to be looking for the monthly higher low. So we can come down really, to the roughly 195, 192 level, start hitting these monthly moving averages, and we'd still be in the context of an overall monthly uptrend. So key levels to note for on the Russell. One thing's for sure, guys, if there's fear in the market, the Russell is probably going to get hit the hardest. And now, lastly, the Dow Jones. I'll not say nothing again. What do you notice on this chart that we haven't seen in the last 5 months of trading, right? Significant loss of your moving averages at this point. Lost. They've never, every time, this is kind of like XLV healthcare. Every time we've lost the 12 EMA, we've been able to recapture it almost instantly, except for a period back here in the middle of March where we kind of struggled with it. We broke higher at that point. Well, now, guys, daily downtrend is heavily underway for the Dow Jones. We are coming dangerously close to 38,500, which, as a matter of fact, is your most recent weekly higher low. Weekly uptrend, right? Higher low, higher high. If we flush this week, tomorrow, or next week, 38,500, you will lose the weekly uptrend and you open the door for the bears to set the lower high into lower low. That would be your worst case scenario for the Dow Jones. And at that point, we could indeed have more brutal sell-off here, right? Talking about 6-7% for the Dow Jones. Dow Jones usually drops less than the S&P and the QQQs, but still nonetheless, that would be a very healthy sell-off if we get something like this over the course of the month of April and May potentially, right? That's worst case scenario. We're just projecting at this point. The lowest we'll probably end up is your prior all-time highs. And if you take a look at the monthly, guys, it'll just really be for a monthly higher low, previous all-time highs as support, beautiful area. The moving average is there as well. Higher low for further continuation the rest of the year. So technical pullback definitely started on the Dow Jones, 38,500. Crucial weekly level. We will keep a very close eye on this. But Dow Jones, just the same. RSI now coming down after being overbought for the better part of the last 2 months at this point, finally coming down to more manageable levels. And the MACD curling first negative weekly read here in the last 5 months. So you will see that all of your indexes are displaying the same characteristics. It's not just one, it is now all of them. So it has to be noteworthy to us. Now, let's move on to a bit of yields. I'll cover yields just because today was such a noteworthy day, right? Yields, oddly enough, actually did nothing here today, guys, right? So on this day, yields were actually coming down despite fears that, rates would stay higher for longer, essentially. So that was a bit of a contrarian trade right there. You would have expected these to come up, but still they have come up a lot on the context of this overall week. Yields still now in their current weekly uptrend, still set the higher high this week. So we'll see, guys, if the higher for longer narrative simply persists, we could just grind this weekly higher. Are we going to get up to the highs of the fear of last week? No. Last year? No, because we have a lot more data at this point. Really not expecting the rates to go, much past this at this point, but a steady grind higher, that could be a likely scenario. That would be entirely a speculative trade, but it's a trade nonetheless. The 10-year is displaying largely the same characteristics, weekly uptrend as of currently, right? And in terms of the monthly, we're still just looking for a monthly lower high into lower low for the continuation of 2024. 20-year yields are exactly the same. Still just looking for a lower high into lower low. Where's the lower high going to be set, guys? I think it's going to be at the end of this fear cycle when we have more certainty when the first rate cut will come. And probably, guys, that's going to take at least another month or two. Rate cuts are off the table for May at this point. So probably in May, when Jerome Powell speaks in May, we'll have a clearer indication of when the first cut's going to be. Whether that's July or August, that'll all depend on the data that comes out at that point, right? So that's just pretty much it for yields. In terms of crypto, guys, crypto also known as a risk-on asset, but today really kind of shrugged off a lot of the damage that was done. You can see that Bitcoin was having a very good day. It did sell off at the same period, and even Ethereum pretty much sold off at the same period that the markets were selling off. But overall, Bitcoin today is still green, 3.5% up, still trying to maintain our current range right now, right? On the daily, it's kind of messy right now. You can argue that we are in a daily downtrend, looking for the lower high into lower low. The clearer time frame for me is the weekly at this point. We're still in a weekly uptrend here, guys, but well, we have a lot of support down here, that's for sure. 66 down to 58. In my opinion, guys, if the markets continue to sell off, crypto is really not going to be spared. I know a lot of people like to think of crypto as being kind of a safe haven trade, kind of like gold. When the markets are fearful, you may get a little bit of rotation into Bitcoin as an upside trade. But I mean, take a look at last fall, guys, when fear hit the overall markets, with Bitcoin going up or down. Bitcoin was going down, right? In 2022, when we had fear in the overall markets, was Bitcoin going up or down? It moves with fear and greed all the same, despite its status as the digital gold, right? As just hard cash. In this current environment. So we're going to keep a close eye on this. If we set the daily downtrend, still have a lot of support down here, guys. I'll be looking to buy these dips. If we do come down into 57, 55,000, going to be looking for the monthly higher low. We have the halving event, which is coming up in pretty much 2 weeks time around April 19th, April 20th. And usually the halving event is a very bullish event for crypto, but in or around the halving event is a very, very volatile time. So we could potentially see some downfall here over the month of April if the rest of the markets do fall off as well. But so far, Bitcoin really remaining strong today despite the negative sentiment in the rest of the markets. Now, moving on to Ethereum. Ethereum not doing as well as Bitcoin, so Ethereum definitely is in the context of a daily downtrend at this point. The lower high is set with the high of today pretty much. We'll just be looking for further downtrend continuation potentially if the market sentiment continues degrading to the downside. We're now below our moving averages. They'll be acting as resistance. So lower low, very possible at this point. Need to keep a close eye on 3,063. If you lose that, it is a weekly downtrend, and that will be for monthly consolidation on Ethereum as well, potentially coming in down, maybe 2,700. I'm not going to say 2,500 because that's a bit low, but it's always a possibility, right? 27 to 25. Look, your moving averages are right there as well. Previous support zone is going to be right there as well. That would be a heck of a move to the downside, but a move that Ethereum can engulf at a later point in time, that's for sure. So that is the worst case possible scenario for Ethereum, in my opinion. And it would represent a heck of a buying opportunity. So keep a close eye on these lows right here, 31.51 for the big flush of our weekly zone. That would probably induce some fear into the markets and could take us below that $3,000 mark into some juicy buying opportunities over the next couple of weeks. We're not going to do this, guys, right? It's going to be probably choppy. All right, so now let's move on to crypto. Hope I'm not sounding too bearish so far, guys. I'm really just trying to look out for everyone's best interests in this market, right? I'm still an overall bull. We're just looking for this opportunity. Been looking for it since February and March, guys. I want to buy some dips, and we are going to buy some dips together. You will see, and this year will be very, very, very good, all right? So let's just get ready, get the cash on the sides, buy some dips, be very, very careful, wait, be patient, wait for the market to come to you, right? If this dip happens, it's going to be 3, 4, 5, 6 weeks of dip potentially, right? So don't blow the entire, entire cash pile within the first week. That's for sure. So we got to be patient with this. Set some levels that you want. My levels can help with that as well, but you may want stocks at your given level, right? Maybe you don't like Apple at 170. Maybe you only like it down here at 150, 155. At that point, just wait for it. If it doesn't happen, if the worst case scenario comes, we come down into the lower 160s, and then we get better macro data. So the market starts gaining more confidence again. While Apple's dipping, some other things are down 10, 15, 20%, but Apple hasn't dipped that much. At this point, you may be able to buy it and just be like, you know what? I was kind of waiting for 155, 160, but 160 at this, 155, 150, maybe 160 sounds like a good deal. SPY's already down 7, 8%, QQQ's down 8, 9, 10%, and Apple's not down that much, so I'll take this trade right here. That's how you need to think about these things, right, guys? So, moving on to Apple just can't catch a break, right? Apple was having a very good day here, guys, today, right? All the way up to about 172. And then the market pretty much fell apart, which ruined Apple's chance of recovery. So Apple still in the context of this daily downtrend, nothing has changed. We take a look at Tuesday's low for the crucial flush level. If we flush that, daily downtrend simply continues, and we look to our last line of defense. This lonely soldier right here, 166 will be our last line of defense. And then, as I said, we're coming down 155, 150 is going to be the next very big area of support. That would be notable to us, guys, because if we lose the 166 level, I mean, we're already in a weekly downtrend, right? If we lose that, it's just going to be perpetuation of the weekly downtrend. Why this one's so important is because if we lose that, Apple would be in a monthly downtrend that hasn't happened since 2022. That would be notable to us. Is it the end of the world? Is Apple just going to do this for the next 5 years, for the next 2 years? No, guys. Apple can just do something like this, and then eventually it's going to take a long time. Well, not a long time, but it'll be a slow recovery. If you lose the monthly uptrend here, guys, usually it takes at least 2-3 months to reverse at this point. So if we lose it, you could take a while to reverse this downtrend with certainty, right? So let's keep an eye on that. As I said, guys, 166 crucial level. I love the valuations of Apple down here, and so be it. If it comes even lower, guys, into the 160, 150 range, well, I'll be going even heavier on Apple, but I do still like these levels. Apple's trading is going to be highly dependent on what the rest of the market is doing. It's not, in my opinion, guys, most of the negative headlines for Apple, company specific, are behind us. Right now, if Apple continues to sell off, it'll be a byproduct of an overall market sell-off, not because Apple is being hit by something negative, in my opinion. Now let's take AMD. So AMD down 8.26% today. Very, very red day on AMD. AMD was doing fine, just the same, right? Prior to this big market sell-off, AMD was really doing fine in the morning. It was only down about 2%, 2.5%, a large portion of the morning. And then your 2 p.m. sell-off came, and AMD got absolutely crushed. So AMD, we were looking out for this, guys. This was one of the possible scenarios, right? We were in a daily downtrend. The bulls had a nice bounce. We were looking to set the the higher low and to increase thereafter, but we were acting against a few resistances. This previous resistance, which was now support, the bulls lost it. Now we're using it as resistance again. We were below the moving averages, a lot of resistance up here, and we unfortunately failed. So now daily downtrend is resumed by the bears, and your weekly consolidation simply continues at this point. Now it's starting to get a little bit dicey on AMD, guys. We're coming into our last area of support, 164 to 158. It held up the test of time through January and February when the markets were bullish. But if the overall markets are bearish, can we potentially get a flush of this level and just extend monthly consolidation further? Absolutely, we can. So this is a crucial level. If we lose 163 tomorrow or next week, we will lose the weekly uptrend. It sets up the bears for lower high into lower low potential. And at that point, just be looking for monthly consolidation. Anything pretty much, look how much space AMD has, guys, 95, right? Anything above 95, just looking for a monthly higher low for further trend continuation. So we're gonna keep a close eye on this area that's coming up fast for AMD. So far, your bears are in short-term control, and we're not even oversold on the daily timeframes just yet. So keep a close eye on this bounce zone. If the bounce zone is not high enough, right, bounce from here. This could be a great first touch bounce trade location, but thereafter we're looking for the lower high. This is a big move here, guys, right? If we come into here, bounce, probably looking for the lower high, and then we'll look to see, can the bulls defend the double bottom, or do we flush through? If we flush through, guys, we're coming into my previous area that I like the best for AMD, 150, 140. That's where I personally love playing it a lot more. At that point, we may be looking for the weekly trend, weekly downtrend, and monthly consolidation right down here into the lower 140 range. Tap this 12 EMA on the monthly perhaps before reevaluating AMD to the upside. Now moving on to Amazon. Amazon had a tremendous day here, guys, today. We got as high as about 185 almost on the day, and then just really fell apart. Very unfortunate. Amazon, this breakout idea was great, and it did work. It played through amazingly, but now Amazon is just being kind of brought down by the rest of the market at this point. So still in the context of this daily uptrend right now, we're now looking pretty much to here, 177, break 177 to the downside. Your daily uptrend is lost. Then the bears have the opportunity of setting the lower high here using the 178 that we broke above. We just literally broke above 178, guys. And now it appears as though if the markets do continue selling off, we're going to end up below it. So if we end up below this area, it's going to act as resistance, maybe expecting the lower high into lower low continuation, guys. And at that point, we'll be expecting some weekly consolidation on Amazon. We'll be looking to the 172 area as our next stop. And all of these companies have earnings, guys, at the end of the month of April. So if we do get a couple of weeks of sell-off in the month of April, could the markets be saved by big tech earnings? Sure, they can. But until that time, we need to be very careful, right? So preferred area for Amazon myself, I'll be looking to play it more aggressively if we do dip down here below the 170 mark. Obviously, I don't hope for that because I have a leap call on Amazon, which is currently in profit, but now really trending back. You know, if we get back here, it'll be pretty much break even at this point. I was looking for the breakout trade. We got the breakout trade. It was looking good. And just today, the markets decided, you know what? Enough is enough. Enough uncertainty. Now we're going back to fear mode, right? So very unfortunate for Amazon. Moving on to Google now at this point. Google taking a bath, right? Got put through the washing machine here today, 2.83% to the downside. That's okay. Google has still a decent amount of space, right? Anything pretty much at this point, anything above 147.21, just looking for a daily higher low for trend continuation. But if the markets continue selling off, guys, and the bears take back too much of this move, opens the door for lower high, lower low. At that point, we'll be looking for the gap fill all the way down here, 144.45, and we'll just be looking for healthy weekly consolidation. Weekly bulls have so much space here, guys, for some weekly consolidation, maybe until earnings. Google as well with earnings 23rd of April. So if we sell off for a few weeks before earnings, can we do something like this? Absolutely, guys. But nonetheless, if we do come down here into this level, we'll be watching out. I'll be looking out to take trades mid 140 range on Google. Now moving on to Meta. Meta was up at 1.3.5% on the day here, guys, today, right? Take a look, guys, from bottom to top from yesterday's open. It was up more, 4.5% as a matter of fact. And now Meta not looking too bad because it's still at the top. It's still at the all-time highs, but heck of a sell-off. So we have to keep an eye on this here, guys, right? Daily uptrend is still in motion by Meta. Meta, one of your stronger names, but we'll be looking now for the daily higher low. Anything above 484, looking for the daily higher low for further trend continuation at this point. But if we come back too much, lose this moving average again, lose this previous resistance, which is now support, lose that, then the bears have a setup for lower high into lower low, maybe a little bit further weekly consolidation as we head into earnings. Earnings going to be pretty much the 24th of April. So very curious to follow this stock until that time. I'd be very surprised if Meta continues a tremendous upcycle until their earnings, considering current market conditions. So we'll keep a close eye on Meta. You guys know me. 440 down to about 430 is where I personally want Meta to make a swing trade happen. Now moving on to Microsoft. Microsoft as well, right? 0.61% of the downside. They were trying to reverse this into a daily uptrend today. Unfortunately, daily downtrend simply continues. We now look to our lower level right here. They're going to be the top end of our prior range. 415. Break 415, you end up back in this range of consolidation, and then we look to the lower levels to really act as our last line of defense. On the weekly as well, consolidation now for the past 2 weeks on Microsoft. So it is currently a weekly uptrend, but currently under weekly consolidation. Anything above the lower end of this range as well, about 400. Anything above that, just looking for a weekly higher low for further trend continuation. So Microsoft as well in the same boat as the rest of big tech. Earnings 23rd of April. Can we potentially do this if the rest of the markets sell off until earnings and then we get a nice earnings pump? Yes, absolutely. We do have the space for that. So just keep a close eye on Microsoft for somewhat of that type of trade. But if big tech earnings, guys, right? If big tech earnings are good and the rest of the market is bad, it's going to create a little bit of a disconnect once again, right? At that point, we could be expecting, let's say we come down because of overall market conditions and then we get a nice earnings bump. Well, if people are still fearful in the markets, we may just start grinding and selling it off over time, right? So big tech stands to outperform even in this market environment. But nonetheless here, guys, crucial data on the last week of April, that's for sure. Moving on to Netflix. Netflix down 2%, trying to erase some of its yesterday's gains, right? We barely cracked the top. So this arguably is a double top scenario. If we now flush these lows right here, 603, we're going to end up in a daily downtrend and we're going to end up in weekly consolidation. Good thing the bulls have a tons of space. Anything above 550, just going to be looking for a weekly higher low. And we do have a big fallback area on Netflix, 575 prior resistance. Prior resistance here as well should be acting as current support. So if we do pull back, we do have a very, very nice fallback area into this zone for Netflix. So keep a very close eye, guys. 601 and your earnings at this point, one of your first companies to report Thursday, 18th of April, coming up quickly in only about 2 weeks time at this point. So could we see something like this on Netflix prior to earnings if the rest of the market falls apart and then we get a nice jump on earnings? Absolutely. But if we do something like this and earnings are not what we expect, we could end up with a little bit of a flush down here. At that point, you guys know me, for anything below 550, I am looking to play on Netflix just as a monthly higher low for further trend continuation. So these monthly charts, guys, are extremely, extremely important. We haven't had monthly consolidation on a lot of these names except for Apple. But look, AMD, monthly consolidation. Amazon hasn't had it much yet, has it, right? Google, little bit, it's had it so far, but still overall bullish. Pull back for maybe, the next couple of weeks, 1 month time, it'll look good on the charts. Meta, not monthly consolidation as well. Microsoft, not much monthly consolidation as well. Netflix, we were just on Netflix, right? And the list just goes on. I'll even go into our next name, NVIDIA, not much monthly consolidation. So could just be due, guys, for some monthly consolidation. NVIDIA coming dangerously close now to 850, right? So 850 is going to be the line to watch at this point. It is not yet a daily downtrend, in my opinion. Right, we've pretty much set lower lows every day. We haven't really had much of an intra-week bounce. We just can't really say that we're in a daily downtrend, even though it looks like that. This is just one daily move, in my opinion. Your bulls really never recaptured, guys, the hourly uptrend at any point in time throughout this move. So it is still one move down, in my opinion. NVIDIA looking very weak, 3.5%, closing at the low of the day. So 850, crucial. Lose 850, guys. We lose the daily uptrend. You could be setting up lower high, lower low. That would just mean weekly consolidation continues at this point, and we will be looking to our lower end of support, which currently, guys, sits at around 700, anywhere between 800 and 750. This whole area right here is going to be the crucial area for NVIDIA to defend. It's going to be a nice weekly correction. If we do end up in that area, are we going to come straight down? No. Could we end up doing something like this? Yes. And that would just be healthy monthly retracements on NVIDIA. So NVIDIA, keep a close watch, guys. sign number one, big red flag number one, is the loss of 850. We're already really breaking down below our 12 EMA. We have not broken down below the 12 EMA except for 1 day prior to your earnings cycle. This is a lot more noteworthy. We've now been below it for about 5 days at this point. We're now losing the 26 EMA, close below it. First close below the 26 since the first week of January, pretty much. So all these things, guys, you see all these little red flags. They're no major red flags, but little red flags they add up, guys. They add up in the context of the larger picture here. And now Tesla had a beautiful day here today. Tesla at one point was up, close to 5%, pretty much almost, selling it all off, only up about 1.62%. And we were looking at this, guys, right? We were looking at this bounce potential, right? The bears have taken back so much of this move after the negative deliveries event, right? Daily uptrend, flush of the lows. We were looking lower high, lower low. The size of the bounce was key. We got a very beautiful bounce, guys. The bounce was pretty much a 62% bounce, which is exactly what you want. It creates the space for the potential daily higher low into higher high. But at this point, Tesla is not going to do it on its own, guys. If the rest of the market sentiment is bad, you are probably going to get lower high, lower low flush, and then we'll just be looking for the continuation of this massive weekly downtrend. Target your lower levels right down here, 150, 152, pretty much lower end of that. And your earnings coming up 23rd of April as well. So could Tesla just continue to maybe grind sideways or slightly down if the market is negative until earnings? And then earnings going to go either way, right? Absolutely. We're going to keep a close eye on this chart one day at a time. But as I've said, guys, I'm not playing earnings before I'm not playing Tesla at all before earnings. I just don't think it's the market to be playing Tesla in right now. The demand obviously has been slightly destroyed by higher interest rates, and we need to start seeing that turn around. This company needs an overall macro shift as a whole. As I've said before, guys, it's not a Tesla problem. The company itself is doing fine. It has great free cash flow reserves, and it has still positive net margins. It's not a Tesla problem. It's an auto industry problem as a whole as a result of higher for longer interest rates. Now moving on to Palantir. Palantir as well, coming heavily down here today. Look how much Palantir was up today before pulling back, right? They were up 5%, and then from top to bottom, down about 6%. So we were looking out, guys, for this bounce in the context of an extended daily downtrend. So we're looking, how high can the bulls bounce? And we were looking, as well, yesterday's video, the moving averages and this yellow line right here, which was overhead resistance. We came into the moving averages, rejected, now potentially looking for lower lows. So daily downtrend simply continues at this point. If we flush 2172, we are going to retest, guys, the lower $20 range. Why is that not a problem? Well, weekly at this point, you can argue now that the weekly uptrend is completely lost at this point, right? Maybe even arguably a weekly downtrend at this point, which would mean monthly consolidation is currently underway. Now, on the monthly, huge support, huge resistance. Now we're above it, should be acting as support once again. That level obviously is between roughly $21 and $19. If we come down into this area over the next coming weeks, April and May, I'm going to be looking to accumulate some positions as low as I can, $20, $19 on Palantir, because I think once we're through this little bit of a fear cycle, right? Well, monthly uptrend is going to continue and push us into the $28 range, potentially by the end of the year. So Palantir, not looking too bad, even though we've been selling off for pretty much a month at this point, coming into a juicy buying area. Now moving on to PayPal. PayPal getting washed today as well, right? PayPal also was up at one point, almost 1.5%, and now the engulfing move to the downside. So same thing now that we had lost the daily uptrend at this point, flush of the lows right here with this new daily leg down, we were looking for potential lower high into lower low, and that's exactly what we got. We got the lower high. Now we'll be looking, can the bulls protect 63, 69, and all of these moving averages? Your 200-day EMA, this green line right here, is right here. Your 26 EMA is there as well, and then we have a big area of support, 63 down to about $61 for the first line of defense here. So we're going to be looking out for the lower low. That would really mean if we do get the daily downtrend, it means that your weekly uptrend is pretty much, or your weekly upswing rather, is coming to an end. And then we really need to look for the weekly higher low into higher highs. So PayPal, if we come down choppily into this area as well, I will be looking to potentially make some plays depending on market conditions. If inflation fears come out, keep in mind we have CPI next Wednesday as well. If jobs data comes out poorly, if inflation data comes out poorly, this stock is not going to have a good time. So I'm going to be looking at the data for PayPal because PayPal is so data dependent. As of now, the bulls have lost short-term control. They're still in control of the weekly time frame here though, right? And we still are looking somewhat decent on the monthly as well. We've created a lot of space since our previous monthly higher low down here at 55. So I do believe the bulls will be able to hold on to this one, but it is going to be potentially a bumpy ride for PayPal. Now, that is pretty much everything in terms of stocks, guys, right? So obviously, I apologize. I wanted to give the negative case scenarios for a lot of these stocks. So we didn't go through what the bulls need to reverse this, right? But you guys should know that by now. Since we're in daily downtrends, we need to watch the size of the bounce. Size of the bounce is on everything, right? Apple, same thing. Size of the bounce is crucial. All of these stocks, we're looking for the size of the bounce. But since now we've broken key structure to the downside on SPY and also on QQQ, we need to look for the downside scenarios. That's why I've been giving the downside levels on the daily and the weekly charts at this point. Obviously, I've been giving bullish targets the entire past of the last 2 weeks. So you guys know what we need to hit these targets to the upside, right? So now we're going to be looking to the downside targets. Hopefully that was helpful. Hopefully I didn't sound too bearish. As I've been saying, guys, you know, we've just been on the channel for the past month. We've been cautiously optimistic, and we've been as data dependent as the Fed has been. So far, none of the data indicates that the macro is bad. The only thing that we've been highlighting now, guys, for pretty much the past month at this point, you know what I mean? Like, I laugh because I was thinking at the time, right? About 2 weeks ago when I made the video, I sold everything, right? And then Jerome Powell green lighted the market, and it still wasn't enough, right? Here's Jerome Powell's green light on the markets, and you can see how reluctant the markets were to use Jerome Powell's bullishness to just keep gaining the levels, right? People are like, maybe he's just saying that because he doesn't want to crash the markets. He doesn't want people to be too bearish. Well, now people are coming to their own conclusions. Maybe we're a little bit high right now for how much uncertainty is currently on the table, right? So keep that in mind. Greed leads to a technical sell-off, and now the technical sell-off has manifested a lot of the red flags that we were looking for to initiate that technical sell-off. So hopefully this video was helpful for you guys. Hopefully I didn't sound too bearish. I'm really not. We're really short-term bearish, but long-term bullish. Let's stack up our cash. Let's be very cautious. Let's let the market come to us. And when it comes to our desired levels, let's start smashing those dips, guys, on companies like, great companies like Apple, great companies like, well, pretty much all of your big tech, right? Whichever one comes to our levels first, we want to be ready to snipe those lows and then ride them for the rest of the year and through 2025 as well. This is potentially going to be one of the last dip buying opportunities of 2024. So let's get it, and let's get it big. Take care, guys. Hope you enjoyed the video. If you did, please consider dropping a like. Really helps me for the channel growth. And also, please consider subscribing to the channel. If you like this content, it shows me that you like this content. And we're almost up to 1,000 subscribers, guys. I thank each and every one of you. I'm so grateful for all the comments that you leave. The engagement that you guys give the channel. It really makes my day every single time, guys. So I can't wait to keep making more videos for you guys as well. And lastly, if you do have any questions whatsoever, questions, concerns, comments, anything you want me to look at a specific stock, leave it down below in the comments, and I will start covering them tomorrow. Today was a very big day. So tomorrow we'll be doing more stock-specific content. There's a few subscriber requests that I've been putting off over the last couple of days just because the last couple of days have been kind of a bit hectic in the markets, right? So tomorrow, after the markets close, since it'll be the weekend, I'll take some time and I'll analyze a lot of subscriber request stocks that I haven't had the time to do. Once again, I apologize to those individuals that I had promised that I would do the reviews of their stocks on the Wednesday session, even on today's session as well. It's just, when the market sometimes gives us these very big catalysts, we really have to focus on the overall picture of the market, because even, individual stocks will not really be saved unless you're really in energy stocks right now or deep value stocks. Those are the only ones that may stand the best chance against this landslide of red that we had today. But as a whole, guys, that is pretty much the gist of things. So take care. I'll see you tomorrow after the close. Peace.